All right, guys. What's good? Hope everybody's doing well. Hope everybody's doing okay. For those of you that know me, no, y'all are good. No, y'all already know me. For those of you that don't know me, I am Space Trades. I am Space Trades, or y'all can even call me NASA. It's all fine. I help in analytics for TMP, basically a trader like all of you guys. There's nothing different between me and you. I just do analytics for TMP guys. I help in analytics. So today we're going to be looking at the trade that I'm doing right now, the trade that I'm looking at right now, how I got to the trade, and basically my whole trading session process, you know, how I do everything and how I get to why I'm doing that specific trade. So this is not really the required time to do the trade. Right now, I'm looking at it. It's 4 a.m. in the morning. But like, it's not really the required time to do the trade. You can, most of the times, depending on what pair you're doing, you're going to be doing different trades at different times. Some of you are going to be doing Tokyo, Asia, you know, New York, London, all these fancy stuff. But like, yeah, before we get into the markets, before we even look at any of that, um, first thing that we're supposed to do, or first thing that I do before I even look at the markets, because I do not want a situation whereby I go inside the markets, yeah, and let's say I place a trade on gold, and then on that specific day there's CPI, and then right on my entry, y'all know, normal time is 14:30 for CPI, right on that CPI, right? I enter, I lose. Why did I lose? Because I didn't check the news. So what do we have here basically on the news? Today is Wednesday. So and mine specifically, my Forex factory, the way it's structured is in such a way that I can only see the USD files, and the most important files are obviously the red files. So that's what I'm looking for. So here we have the federal funds rate, employment costs, FOMC statement, FOMC press conference. Now, I really don't really dwell too much on that because they all have their own impacts and they are what they are. But like mostly when I just see red and I see USD and I see either FOMC, NFP, CPI, most likely on those days, I'm either going to trade off of like the CPI forecast or the NFP forecast or whatever forecast they've given us, and also with some of my own research backed off of that, or I'm not going to be trading at all on that day. Using my types of setups, I'm not going to be trading at all on that day because usually it messes up everything. It messes up everything. The market's too volatile. You can't take any trades. You can't even enter because of spreads, brokers having different prices on entries and whatnot. So it's all different stuff. So basically, what I'm looking for here is whether the market is going to be very volatile or not. And here we have FOMC statements, FOMC projections, and the press conference being released all today, meaning that there's a big chance that the markets are going to be volatile. It's not certain, but like there's a big chance that markets are going to be volatile, and we don't even have a forecast. We don't have a forecast. We don't even have a previous. And if I click in here, I'm just going to see more and more of those details. Now, I'm not going to do all of those details. We're going to move on because this is my trading process. This is how I do things. So I just check the markets whether I see if there's anything scary going on. And right now, judging off of the way gold in the market is moving at the end of the year, it's very choppy so far. So we'll see. Maybe FOMC will do something about it. Maybe, yeah, maybe we will have volatility, but I'm most likely not looking to take trades today. But there is a trade that's hanging. That's the one that I'm going to be explaining later on. Market hours. Ladies and gentlemen, boys and girls, this is very important. Whether you like it or not, we thrive off of the market hours, guys. You have to know in which session you are in and why you're getting the volatility that you're getting depending on that pair. That's where market sessions come in. You find that in one session you're more volatile, in the other session you're complete garbage because of the sessions. Because timing is everything, guys. In trading, timing is everything. I'm not going to dwell on this too much because most of y'all know this already. If you want me to explain it to you, I can explain it to you either in another video or I can teach you myself. There is no problem with that. So here, what we can obviously see is that we're in an overlap of Sydney and Tokyo. And soon enough, in the morning, we're going to be approaching London. So right now, the trading volume is medium at this time of day. Obviously, they just simple stuff. Simple stuff. In trading, guys, simplicity is everything. Don't overcomplicate your life. So yeah, check out Forex Factory. We've seen that there's FOMC. There's going to be some volatility. Check out market hours. We know the session that we're in right now. We're in an overlap of Sydney and Tokyo. Good stuff. We know where we're at. We know how we're gonna execute. Now onto the markets themselves. Now here, my friends, this is gold, guys. By the way, this is all I trade. All I've been looking at is just gold. I got nothing else on my trading view. So we're gonna go down from the daily and we're gonna look at our sentiment. We want to know where we are in the market. Are we bullish? Are we bearish? And judging already by just using simple structure points. Over here, we were bullish for a while, came back a bit bearish, but we're still in a bullish market. We're still in the bullish market. But then comes the point of, oh, NASA, why do you have a sell position going on here? It's based off of my strategy because from my strategy, I look at higher time frame points, not key levels, not the TJR stuff, but like supply and demand. Yes, that's the word. Supply and demand. Forgive me, guys. Supply and demand. I look for high time frame, high probability supply zones or demand zones. In this case, I found a supply zone that price was reacting off of, and basically, I just look for reversal confluences. Right? You know, it hits a demand. We have reversal confluences to take the trade. We have some sort of entry in our entry criteria that we use to take stop loss measurements and all that stuff. Then we take the trade. That's how I work, man. Basically, just a reversal trader. So how it worked? No, not text. Game one text. I think it started here. If I remember, it was a while ago. And it was this specific one. Now, this one on the daily, it doesn't look like anything because I didn't really find anything on the daily at that point in time. Go down to the 4 hour. This was basically our FVG. It's our 4 hour FVG. It worked once. It's using that same point again. And now we're gonna go down to the 2 hour and the 1 hour to look for our liquidity zones. Now, y'all gotta know, guys. You just have to know. The way I see the markets, okay, you don't have to know this, but like, you can if you want to. The way I see the markets, engineered by themselves, they're engineered via liquidity. The markets thrive off of liquidity. It's all they know. It's all they work off of. Unless, I don't know, there's some market, maybe synthetics. I don't know how synthetics work, but like forex, commodities, whatnot, even probably even futures. I've never traded futures in my entire life. Futures, man. These things, they work on liquidity, whether you like it or not. They will follow liquidity like a magnet. It's their magnet, same as the supply and demand zones. Like the zones just have to be mitigated, the liquidity just has to be mitigated so that there's like a fair share in the markets. And I can show you from previous trade that I took. Where was it? It was right here. Ignore all the green. Ignore all the green. Let's just imagine right here there was a liquidity point, and right here there was a liquidity point, right? And we can even draw this out for simplicity's sake. We could draw this out. I like drawing it out. So we start here on this demand zone. I think let me remove my session so that you can see everything clearly. Yeah, that looks way better. We have this zone, right? On that zone, price taps it, taps the zone, and what do we have here? We have a couple of reversal confluences. We have a market structure shift followed by a breaker structure, and when price bounces off of this FVG right here, I didn't draw it big enough. It bounced off of the FVG. We start looking for, the market starts to shift back into what we call bearish sentiment. And over here, after it changes its, overall character and whatnot, we have some sell side liquidity that it has to take out. We have another FVG over here that has to be mitigated in order to facilitate the rest of our continuation. So what I did over here, after the market structure shift and the breaker structure, I drew this GAN box. I think that's what it's called. GAN box, yeah. Sort of like a fib or whatnot, but I just set the settings up to a point where it gives me just two levels. Just two levels. Basically, that gray area, that gray area, which is our premium, this green area, which is our discount. Which, yeah, buy low, sell high. Simple stuff, guys. Price comes back, pull back into our green zone. And not only does it tap back into our green zone, look at that. It taps back into that FVG right there. Right there on this red dot, you take the trade, you place the stop loss below that zone for refineries and for refining strategy and for what you call it, better risk management. So basically, it taps that zone, and what you have here, the rest of it is basically history. You basically have continuation or not, and it's been working like that for the rest of, I don't know how long. Here, market structure shift, somewhere inside there was a breaker structure. You draw your GAN box, premium discount. That nigga's gonna pull back up. Rest of it is just sales. You can even refine that thing down there. They've touched SL. Why not, man? And my strategy is it's not profitable. It's not profitable. I'll tell you the truth. It is not profitable. Actually, it is. It is profitable. It is profitable. But like it's not profitable at a high level. You know what I'm saying? It's just simple for me to understand. It's just simple for me to understand. To me, it's profitable. To you, it may not be profitable because it's what I find simple. So find what fits you, and cater to your style. Hell, you can even steal mine and just paste it as your strategy, man. These days that's basically how it is. Take someone else's stuff, add a bit of your sauce on it, and bada bing, bada boom, you have your own strategy right there. As long as it's easy to understand, you can spot it anywhere. It's yours. It's your world, son. So here, right now, I'm in a sell. I'm in a sell position in gold, and this happened like a while ago. So it tapped off of this demand zone, which is a higher demand zone, yeah, a higher time frame demand zone somewhere else. So after 1 hour, 2 hour, where we marked our liquidity zones, which were boom here, 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 which are basically our swing lows. You can tell that some of my swing lows might not actually be swing lows, but yeah. Um, yeah, best just 2 hour and 1 hour is basically where I mark out my swing lows, my hourly swing lows, my sessional swing lows, which is where this bad boy comes in, where it shows me all the sessions. And as you can see, all these sessional lows need to be taken out. There's no mitigation here whatsoever. That's why I'm following the liquidity zones. That's why I need price to break down and follow even downwards. But yeah, you can take this trade by yourself. You can you can take this trade by yourself. If anything, if you enter now you'll be fine. But like obviously this video will be posted like hours later. So you hey man, if you find another entry, you go for it. But like liquidity zones, like I said, the market runs off liquidity. It wants these zones no matter how you put it. So 2 hour, 1 hour, mark my zones. We come back now to the 15M. Come back to the 15M, 5M, and 1M. That's where I take my entries. I think that's where we all take our entries. Yeah, because smaller time frames move faster and they give us an exact point. And as you can see right there in this red thing, this red dot, just get rid of it right there. Let me remove this so y'all can see it properly. Because a lot of my colors, they're like green and white. So that's basically just my whole thing. So you might be barely able to see. But like right here, we have a market structure shift, which is why I consider a market structure shift where the market just shifts. Basically, it is in the name. Market structure has done what? Shifted. Very simple stuff, guys. Shifted from bullish to bearish. Now we're going down for shorts. Market structure has shifted right here, right here. And then on top of that, we have a breaker structure over there. And then what are we looking for next? What are we looking for next? One of these points to be used as FVG as flip zones. As flip zones. If anything, there was another demand zone down here. Now, as trading goes on, you will see things like you will see things by yourself as you go on. Things that you missed. Like right now, I just found something that I missed. So right here, what do we have? Freaking what do you call it? Demand zone, right? Lower time frame demand zone used as a flip zone. Very important. Used as a flip zone. Goes, flips, flips, flips. Now immediately he starts flipping, right? I have to drop this gap box from these highs to these lows. You understand? So that I can see where I can catch my sells at an optimal level. I could have caught it here, but it wasn't deep enough into the gap box to actually say that, okay, price is now deep enough that it can now start continuation. No, it's not deep enough. I could have entered here, but as you can see, it would have come back up here for some drawdown, depending on my account size. And obviously, you niggas don't like seeing red numbers. It's just the truth. You just don't like seeing red numbers, and it's very true. So, starts reversing back, And what do we have here? Right there, right on the number. Right here, what did it bounce off of? This FVG. Pretty sure it's this FVG. The 15M. And like as you draw more zones, you're gonna end up realizing what zones are more useful and what zones are not useful. What classifies itself as a high probability zone and what classifies itself as a non high probability zone. You will learn these things as they go. Yeah, so fair value gap gets hit right there, and boom, continuation candle there, boom, continuation candle all the way down here, and it's still going bearish. So you set it right there, stop loss slightly above that with some pip breathing room, and then usually you're gonna hate me for this. You're gonna hate me when I say this, but like me personally, my trades, my type of trades, they take about 1 to 2 days to cook. What do I mean by 1 to 2 days to cook? As in, from the time I hit sell, like here, I'm in this sell position right here. From the time I hit sell, it'll take me 2 days or probably even more. I remember this last one, this last buy took me like Friday, Monday, Tuesday, Wednesday, Thursday, Friday. It took me like a week. Market was just ranging, and then at some point, boom, we were blessed by the trading gods up in there, be. So this will take long. Can be classified as it's as a swing trade, man. But like me personally, I'm a day trader, but like you could call this a swing trade. It is a swing trade, in fact. So right now, we're just chilling for price to go lower and lower and lower. And right now, it's been ranging for a while. I don't know why. I think it's because it's the end of the year, but news hasn't been really doing that much for price for a while now, and I don't even know why. I genuinely don't know why, because today I'm expecting FOMC to do something. Expecting FOMC to do something, but yeah. And you have to realize something else I was told, um, about news, especially these high volatility news, is that news is basically just a continuation of price action. Just is price going where it's supposed to go, but like just at a faster rate. That's just what you have to know. So yeah, that's basically my strategy. Basically what I do before I take any trade at all. It's basically my whole process. And yeah, we're just gonna have to see how this gold long swing sale will have to go. I hope it goes well. I hope it goes well. Anyway, even if it doesn't go well, hey man, you win some, you lose some. You can't win all your trades, but hey man, I've definitely won a lot of them. A lot of them. I'm not even gonna get into the MT5, man. This is just clear analytics. This is just my type of sequence, what I do before I go into anything. And now I'm just waiting for this trade to cook. This trade started when? So look, Friday last week. Friday last week, and this is what? Wednesday. Wednesday, I'm still waiting on this trade. But hey, man, patience. It's all just patience. I think that's what it takes to be a trader. I think being a trader shows you patience. You lose a lot of money, and you tend to get to a point where you're just, there. Because me personally, I tell myself like, I don't trade to get money. I don't trade to get money. Money is like the byproduct of me trading. Real reason I trade is to have a system that you know, brings in that money. When you have a strong, solid, consistent system that you can use forever, and that you can say that, okay, this is my system, this is my forever setup, then I'm telling you, man, it's wraps from there. You're just bound to get big. You're just bound to get big. But yeah, yeah. I'm telling too much stories now. Telling too much stories now. That was, me getting straight to the point, straight to business, guys. Um, thanks for watching the video. Thanks for watching the video. Um, yeah, I believe in y'all. Y'all are great traders. Y'all are gonna make money, and y'all are gonna make more money than me. God bless all of y'all, and yeah, happy Christmas trades.